Hey everybody, Jeffrey Beamer here, Senior Investment Strategist over at ewotrader.com. Welcome to earnings call here on a Monday, March 3rd. It's our first trading day of March, and we are in for a lot of activity this week. If you haven't watched this show before, you haven't seen what we do here, we talk about the estimated moves of stocks through earnings. And we do this so that for you, the trader out there, especially if you trade options, these are key numbers for you to decide whether you want to buy volatility or sell volatility as we go into the earnings announcement. So for this week, we have just over 500 stocks declaring. This is notable because last week, just for the week, we had over 900 companies declaring. So this is a significant reduction. We're on the backside of earnings season right now, but we still have a lot of opportunities out there. In fact, this week, retail kind of takes the lead. There's a few technology names sprinkled in there, but retail is at the forefront with companies such as Target, Best Buy, AutoZone, Ross Stores, Footlocker, Costco, and Macy's. Okay, they all declare this week. And then last week, we did a trade on Dell Technologies. So you want to see how we are performing in that trade. And also, I have a new trade idea for you. So welcome to earnings call. Let's get going. So each week I publish a list of stocks that are going to declare earnings in the week, and I send this list out to our subscribers, and I break it down into those that are going to move greater than 10%, at least that's the estimated move by the option market makers, or those that are anticipated to move less than 10%. We call those quiet stocks. So any stock that moves single digits, we're going to put on that quiet list. Any stock that we think is going to move double digits, we're going to put that over on the breakout candidate list. All right. So let me show you an example real quick of a quiet stock because we're going to talk about those first. All right. A quiet stock is a stock that you can visually see the statistical volatility or the historical volatility of the stock. That's what you're looking at here. And you can see that I've got the earnings announcements indicated by the vertical line and by the ellipse on here, and you can see that Pfizer just does not move very much. In fact, it moves less than 4% on average through the earnings announcement. We consider this a quiet stock. Look at the trading range there between 24.73 and 31.21. The stock, it's done that for over a year. It's just a very quiet stock and doesn't make the big moves. So let's take a look at our list for this week on the quiet candidates. We're going to begin with AutoZone. Now, a unique feature of AutoZone is that this is almost a $3,500 price point. Okay, AutoZone is priced at $3,478.54. That's the current price of AutoZone. But believe it or not, they have an estimated move less than 5%. So AutoZone is, a big company, been out there for quite a while, and just their earnings cycles these days are relatively quiet. Single-digit numbers. They declare Tuesday, March 4th, so that would be tomorrow, before market open. So we'll know. In fact, we have a lot of stocks declaring before market open actually tomorrow. Next on our list of quiet stocks is Ross Stores. Okay, Ross Stores will declare on Tuesday, March 4th, after market close. Now, this one is up at the upper end of the range. Its estimated move is around 9% or less. Okay. Right now, when I checked pricing right before the show, we were trading around 7% was the estimated move. So we anticipate this to be a single-digit mover here on Ross Stores, again, declaring tomorrow after market close. That's Tuesday, March 4th. All right, then a family favorite. It seems like every parent above a certain age loves Cracker Barrel. All right, you can see that they were in a very nice trend going into the beginning of the year, and then they have just fallen off a cliff here. Now, they will announce earnings on Thursday, March 5th, before market open. The expected move here, though, is less than 7%. So even though the stock has gone from 65 up here near the top, all right, it hit $65 a couple of times and now is trading at $43 through the actual earnings event, through the announcement, just for that 1 day period, we're expecting a move less than 7%. Okay, so it's not about the overall trend, it's just about what it's going to do through that earnings announcement. Okay, rounding out our quiet stocks for the week, believe it or not, is Costco. Now, here is $1,000 stock. Okay, 1,055.71 is the current quote for Costco. They will have earnings on Thursday, March 6th, after market close. But again, even though this is a big numbered stock, it only has an average move less than 5%. And that is the expected move as we go into earnings this week. All right. So when we talk about selling premium around earnings, we're talking about doing things like iron condors. Okay. Selling premium. You could do diagonals, et cetera, and so on. If you don't know what a diagonal is, then you probably don't need to be trading it. Okay, you can learn about it first, but really we focus on iron condors and selling that expensive premium and then hedging the risk off by buying the tails on the upper and lower side to help protect the stock or help protect our margin. Okay, it's all about protecting buying power, and we do those types of strategies. Now, as we go through this list, if you like what we're seeing, there is the chapter feature that is available, and you can click right to each and every stock that we declare or that we talk about and give the estimated moves for. So as we transition now, we're going to talk about our breakout stocks, and these are the ones that are very exciting. Okay, this is the one that grabs everybody's attention, and everybody zeroes in on the big movers. So as we look at the list, I want to give you an example of what a breakout stock looks like. Okay, this is Akamai, and AKAM is the symbol here, and you can see that this stock is a big mover around those earnings events. It usually gaps. It's usually moving, $10 or more through the earnings event. In fact, the last earnings event that you see there just a few weeks ago, this thing dropped by 25%. Okay, so a big mover as an example. And these are where we buy straddles and strangles. All right, we buy just simple call put scenarios done at the same strike with the same expiration. That's a straddle. Done at two different strikes with the same expiration, meaning a call and a put. That is a strangle. All right. And so as we get into our list this week, believe it or not, a lot of the retails pop up here. So Target will declare tomorrow morning, that's Tuesday, March 4th, before market open. Okay, nice and early. It has an expected move of over 14%. And you can see here that Target is one of those stocks. Man, it is fun to trade. All right, look at these big moves that Target makes, and that is a great move for those that know how to trade volatility. And if you can get a straddle or strangle that comes in at around 10% of the stock price, okay, then you have a very good trade. All right, and I did see some on Target a little earlier today. Next on our list is Best Buy. All right. They also have earnings on Tuesday, March 4th, before market open. The average move here is greater than 11%. All right. So the retailers are really at the forefront this week, and that's going to give a good indication on the consumer. The consumer is kind of starting to tighten their wallets a little bit, or keep their wallets in their pocket a little bit, and these retailers could be affected by that. All right. Now, as we get into different things within the economy, you have a company like C Limited. All right, and C Limited has earnings on Tuesday, March 4th, before market open as well. Okay, the expected move here is greater than 12%. Now, take a look at this stock chart, though. As tech starts to sell off, where do you go? Well, you can see that there's been a few stocks here that are in nice uptrends. All right. And C Limited is definitely one of those. Yes, it's had a little bit of a pullback here. All right. But we'll see what their earnings do. And if their earnings are good, greater than 12%, and it pops up to say 140, we could see definite follow through on that, as momentum investors will pile into any stock that they see has strength while the rest of the market is pulling back. All right. Now, one stock that did not make our list this week, but is a notable name, is CrowdStrike. Okay, they didn't make the list because I'm usually on my list. I'm putting the top performers, the top breakout performers and the also the best low performers, meaning quiet stocks. So when you're right in the middle around that 10% range, 9, 10, 11%, you often don't make our list because there's usually stocks that move only 2 to 3%. And then there's these big stocks that move 15, 20, 25% around earnings. But CrowdStrike, as you can see, it has an average move right at 10%. Okay. And so they did not make my list, but it is a notable name, and a lot in the media are talking about CrowdStrike this week. And so it's in a sector that I feel like it might have a bigger move this week. And that's the reason why I wanted to go ahead and include it. Now, they will have earnings on Tuesday, March 6th, after market close. And so watch for that one because it could really move. Now, the problem with trading something like CrowdStrike is that this is a $390 stock. And you're going to find that the straddles on this are going to be $2,000 to $3,000. Okay, so really only bigger accounts can trade something like CrowdStrike because the cost of the trade is pretty darn expensive. Now, if you want something that is not so expensive, well, let's take a look at Footlocker. Okay, this Footlocker will have earnings on Wednesday, December 4th, before market open. Okay, the average move of Footlocker, believe it or not, is 25%. Okay, they are expecting a big move this week, as they do typically around earnings events. They will move. Now, a $17 or $18, is trading right there at that $18 number. Here, you're going to be able to get usually a pretty inexpensive trade. However, the percentages work the same. Okay, if you can get this for 14%, expecting your pricing where your break evens of your trade are about 14% away, maybe 12% away, that's a good value for a stock that averages around a 25% move through earnings. All right. So we would be buying a premium here in anticipation of a big move around an earnings event. Okay. Now, getting away from retail for a moment and back to tech, we have Zscaler. Zscaler, the symbol is ZS. They will have earnings on Wednesday, March 5th, after market close. All right. The estimated move here is greater than 14%. Now, this is 193 stock. You run into the kind of the same situation here. Straddles and strangles will usually be about $1,500 to $2,000 for a straddle or strangle here. But they do historically make a bigger move. All right. And so what's interesting is you can get the same returns with these big stocks. So for those with bigger accounts, don't be afraid to trade these because these are some of your big winners. And so where some of the cheaper stocks, sometimes they can barely make their double digit move. Like Footlocker is a good example. It's not gonna do that double digit move every single earnings cycle. There's usually one during the year where it will move single digits, and then it'll go on a run of the next 6 earning cycles. It's moving, greater than 20%. Okay, type thing. All right, so just be aware of that. But Zscaler is always on my list and a great stock to trade. Great stock if you can get the pricing on Zscaler. Definitely one to look at. And lastly, on our list is Broadcom. AVGO is the symbol here. They have earnings on Thursday, March 6th, after market close. The average move here is actually that should be greater. All right. It should be greater than 13%, not less than 13%. We do expect, again, a little bit of volatility here around Broadcom, just given the sector that they're in. In fact, I'm going to go ahead and change that real quick because that's bothering me. So let's just make sure that we get that changed and greater than 13%. All right. And there we go. And that way I don't lose my, don't go crazy because I had the wrong little indicator on there. So great. Thursday, March 6th for Broadcom, average move greater than 13%. Now, if you like this content, we would appreciate a little like and maybe subscribe. Definitely subscribe. You want to be alerted when we do this each and every week around earnings, because this, believe it or not, this is a very powerful document, very powerful tool, and a very powerful show where we talk about these estimated moves. And if you know how to do some of these option strategies, this is where it comes in very handy. Okay, the straddles and strangles are easy. The biggest problem with that is people apply straddles and strangles on stocks they shouldn't be doing them on around, and the timing on them is awful. But earnings are a great opportunity to profit using those two strategies. Okay, now given that, let's take a look at what we worked with last week. We gave out a trade on Dell Technologies last week. The setup was relatively good. Okay, it did have a little bit of a rally. What I like to see is some consolidation going into the earnings announcement. This rallied right before the earnings announcement and then started to roll over a little bit. We did a strangle on Dell Technologies. And then the trade, actually, we've kept that trade open. Okay. If we go to the current situation on the trade, now this snapshot was taken a little earlier this morning. Dell is trading a little lower, actually, right now than that number. So we had a profit this morning of just $91. Okay. So in 7 days, that is an 8.8% rate of return. Not usually what we're accustomed to with these breakout trades. We have 4 days left in the trade because these options that we use expire this Friday. So given that Dell is trading lower, let's see here, by almost 5% today, it would be so when this snapshot was taken, as you can see, Dell was trading down a little over 3%. Now it's trading down almost 5%. So that profit is now probably $150 or so. I would definitely hold on to this till probably Wednesday and then take the exit if it continues to show weakness. If it shows any strength, I would exit it right away just because time, theta decay, even though our puts are in the money, all right, gamma would take away the profits really quick as that delta, it would erase that negative delta we have in the trade and we would lose profits pretty good. Because right now, our puts are in the money. We have negative deltas, so we're going to start acting like stock. As the stock goes down, we're going to be making money. But again, we need it to not show any strength as we go into the rest of the week. So what do we have for you this week? Okay, well, we have another technology company, Marvell Technologies. All right, this will be our new trade for the week. All right, we're also looking at another strangle here. Okay, again, we buy a call and we buy a put at two different strikes with the same expiration date. Yes, we're paying for higher premium because implied volatility is higher, but we're expecting a big move. For Marvell, we're definitely expecting a bigger move here, well over double digits on Marvell, and we see the stock either popping back up towards that 110 level or dropping down below 75. Okay, as we go into the earnings announcement that is later this week. Okay, so the strikes here look to be around 92 and 90, given where the angles are here. So 90 and 92, or maybe it's 89 and 92, somewhere in there is where the strangle is. Just look to see where current pricing is. If pricing, for example, is now trading at 89 flat, then you might want to do the 87s, 89s, or excuse me, the 87s and 92s or something like that. But definitely we're looking at a strangle being the most efficient trade to do, where a straddle would be more expensive. The strangle is a little less expensive and the break evens are actually right about the same. So that's why we're looking at a strangle on Marvell Technology. MRVL is the symbol. That's Michael Romeo Victor Lima. Okay, that is the symbol. So that is our show for this week. Again, not near as many stocks as we've had in the past couple of weeks because we're on the backside of earnings, but we have some big names as we go through the month of March that still have yet to declare. So you're going to want to tune in each and every week. So please like and subscribe. I've got a free gift for you here at ewotrader.com/straddle. That'll teach you how I trade these straddles going into the earnings announcements. And that is a free guide for you to download and get some new ideas that will help you profit from your option trading. So everybody have a great trading week. And I will see you right here again next week. Take care.